I want to talk about like commercial. We're talking about different buckets. This one I think is a little harder to pin down, just because opportunities, like you said, it's fluid. It changes. If one's out of whack, this opportunity presents itself. And as we're going through different areas, you're in Dallas, you're in Arizona, Phoenix. Um, what other areas are you investing in commercial?
Um, right now, I'm a big fan of Colorado, Arizona, and
Okay.
Texas. Those are probably the top three. Um, I would go to Atlanta. I would go to Florida. I'd go to the Carolinas. We've done things in all these markets, but right now, those are my main
Okay.
three: Colorado, Arizona, Texas. Um, I'm looking at stuff actively, a lot wider than that, but those are my favorites.
So is there like I feel like I already know this answer because it's how I would answer, but you're doing bigger stuff. So I'm just going to ask, like, is there anything like someone listening to this call and they're like, hey, I think I have a deal potentially for Chris and his company. Is there maybe a couple buckets you could give them real quick?
Sure. Um, we'll look at multifamily that's probably, let's say 50 units or
Okay.
bigger. We prefer 100, but I'd go down to
Okay.
50 for the right deal. And I'll say anywhere from 5 million to 40 million on a purchase
Okay.
price for deal size. Because units alone don't necessarily dictate that kind of thing, right? 50 plus units, 5 million minimum. Industrial, I'll go as low. I shot an offer on a $2 million building today. Uh, that'll be second cheapest deal this year.
Where at?
It's in
Oh,
Dallas.
nice.
Um, yeah, it's like 23,000 square feet. It's in Plano. It's like a nice part of Dallas. I I'll retenant this thing in 2 years and have it. It'll be worth four.
Okay.
Um,
Nice.
I just couldn't resist. It's a 50% annualized return. But I'll look at industrial 2 million to 30 million. Say 20,000 feet to 300,000 feet. Um, and then the housing bucket we went over, and then those are the other two buckets that I look at and that I like a lot right
Perfect.
now. I'm not trying to be too creative with office and hotel. I mean, there's a bunch of sectors right now. Retail, I'll only do retail right now if we have a tenant in hand and I can build a store with a tenant and make, quick money building
Right.
something.
Yeah, I guess it's just where you want to spend that attention, right? So there's only so many hours in a day, and you guys, me working with Chris, he reminds me of that. So I'm in this bucket, and he's in this bucket. So he doesn't, or even further up, but I'll focus on those reposition ones. I don't mind doing that heavy lifting sometimes. So
Hey, they're all good deals. I mean, the big dollar deals, the effort is generally the same,
right,
right? It's really the activity. Am I building something out of the ground? If I am, it's going to take a longer deal cycle. You know, I like I like taking a longer deal cycle and having a bigger upside return with some of my money. Then I really like value add stuff where I can just buy in a little lighter lifting and I can make, 15+% annual return, 15 to 20s, maybe 25s in there, right? If I'm developing, I'm looking for 30. And then I do lending. I love lending money out.
so you raise capital. Like, let's talk about that. Like, do you have a preferred return you give to people in terms and stuff like that? Like, I know you give a lot of people that uh, want to give you money and offer you guys money. Do they need to be accredited or could they be non? I'm just curious.
Yeah, that's a good question. So we have three funds that we actively manage here, in addition to a bunch of side deals and one-off deals that we make. But our funds are all for accredited
Okay.
investors, uh, which there's a few ways to meet that. The two most common are $1 million of net worth or 200,000 a year of income for the last 2 years. If you Google SEC accreditation requirements, you can see what it is. Um, Now we do syndicate deals which means we create a partnership for a single asset. People do not need to be accredited for those. It's different in every state. At least in Arizona, our securities attorney helped write the legislation for that. We're very familiar with how all that works. Our in-house counsel would slap me for not saying, we're not offering any securities or investments or anything like that, right? Every deal we've got to look at for its own performance, and past performance doesn't mean anything, that kind of stuff. But yeah, if there's deals that we should be looking at, or if you've got cash that you'd like to put into deals, we'd love to hear from you.
Yeah, no, I
mean, both sides of that coin, right?
Well, I think a lot of,
deals and
well, I know that you have a very good track record, success record in real estate investing. A lot of people keep and continue investing in what you do, or in the projects that you have. I was curious, and I think I know the answer to this, but I just want to confirm. Let's just say, for example, I'm an investor. I've got a couple people. We invest $1 million in your project, right? And let's just say you decide to keep that long term. If you put debt on that and take us out as far as what we've put in, maybe to get a lower interest rate, whatever it might be, right? You're putting bank debt in replacement of what we put up to buy, acquire, reposition, whatever it is. So then you take that debt off the table by putting new debt, bank debt on. Do you keep those people in the deal, or do they get their preferred return, whatever that might be on that deal? Yeah.
So I'm a little different than some on this point, and I'm glad you asked. I like to take partners on. We run a structure with a general partner and a limited partner. Basically, the guys that put the money in are the limited partners. The guy running the deal, generally me, is a general partner. And a lot of people will try and raise money from people who have equity to invest. And they'll say, okay, here, I'm going to pay you a preferred return, and then I'm going to go refi, you get your money back, and now I own the real estate. That's great. The people who do it are happy on both sides, it seems. But when we raise equity, they are our partners. So in your scenario, 4 guys put up $1 million. I probably wouldn't pay $1 million cash for anything. I'd be using a loan to start. I'd go buy a $3 or $4 million property with that $1 million. And those guys would own their piece. I'll take a piece generally called the promote for running the deal. And then when we refinance the money, myself and them get the money we put in back out. And then we still own the deal in the same ratios. So I treat equity as a partner, not as debt.
That's what the point I was getting to, which is super unique, because that's the way I structured my syndications, and I hadn't heard of anybody else doing it. So hearing, obviously mine are small deals, but I think, I was reevaluating it after I haven't heard of anybody else doing it. So I think it's really cool that you do that and you allow the people to stay in, and it's a true partnership. I really do. And I think anybody listening, like, to get your money back out and still own the building, you get to go and use that potentially again and do that again and again and again. Right. So that's.
Well, John, those guys usually say, what are we buying next? You know, they don't say, oh yeah, thanks for my money, and now I'm going to go somewhere else. I just, double, triple their money or something. I've made several guys that were not millionaires, and they may, those guys are big advocates of me because of what we've talked about. Do what I say I'll do. Generally have made money. Actually, aside from a few flips early on, it's been a long time since I've lost money on a real estate deal. They don't all go as well, but I'm ultra conservative, as you know. I look at the downside risk. I'm a banker. I was in banking before I got into real estate. I always look for the worst case. Too many guys show up in this business and they want to see, this is what I could make if everything goes right. Well, that doesn't happen very often. I want to know what happens if everything goes wrong. If everything goes wrong and I could tolerate that answer, great. Because that's what I'm always looking at. It's not the return that we could get. I want to know what my risk adjusted return is. So if I'm taking this much risk, I better make that much money on the win, not the other way
Right.
around. And a lot of guys do that, right? If everything goes right, I'll make a little bit of money. But if I mess it up, I lose. Like, why would you do that? You
No,
know?
it's a great point. And I think a lot of people, especially in this market, it's hard to have even multiple exit strategies just with the pricing moving up. So yeah, just be careful on some of the single family stuff, in my opinion. Unless you're buying right, if the market keeps moving, good.